observed the period between April and October, there's been such a sharp difference in commentary, in outlook. There is just so much of bullishness, optimism, and positivity now. So, what exactly happened in the intervening months? And more importantly, I think what all stakeholders want to understand is this here to stay, or is this a transient phenomenon, or are we staring at a multi-year growth cycle? How would you characterize this? Is this a recovery that has come back on strong legs that can go ahead, forge ahead for the next couple of years, or is it going to be a transient phenomenon?
So, Chandra, I think what happened, I'll speak mainly for us at Infosys, what happened at the end of March, April was with all of the medical crisis going on. It wasn't really clear how the global economy would work out. And so that put a lot of concern into the overall environment. As the months progressed and as we saw first, many of the governments across the world had done a lot of work in boosting the economy and fueling demand, supporting individuals and companies. That gave a lot of support to businesses and therefore to what we're doing. Second, as all of this has become digital and all of us have become much more familiar with working in and really connecting with a digital setup, we saw large enterprises also moving faster on their digital journey. And that gave us a tremendous boost, in part with a lot of the investments we made over the last few years, some of the strategic directions we've taken, and the speed at which we moved when the medical crisis came upon us. And then, of course, we've had really steady execution all through, making sure our employees were safe, making sure the client service delivery was going on. And that gave us more support from our clients as we've been working through each month by month. In terms of looking ahead, I think the move to digital is definitely something which is a major secular trend. You saw we launched our Cobalt Infosys cloud activity with a huge impact in the market. And we see that digital and cloud thinking with the way the clients are looking at it continuing for the foreseeable future.
So are we at the beginning of a multi-year growth cycle, Salil? Are we going to see the momentum that we saw in Q2 play out for the next, say, 6 or 8 quarters?
So there, Chandra, my sense is specifically the areas of digital cloud and the ones within it, for example, data, for example, cybersecurity, the Internet of Things, the whole area of experience. I think those have a very good growth trajectory. And then it's a function of really how we bring things together with large transformation programs. If we remain committed to our clients and on this focused path of what's relevant for our clients, we see a good future for the coming quarters.
Right. But when you say good future, will this mean double-digit growth that the industry, not just Infosys, will perhaps return to that double-digit growth trajectory from next year?
So there, Chandra, I don't have a good sense of the industry and where that would go. I'll say more specifically for us, if all of our digital investments are focused on what's relevant for clients, gives us good confidence for what's coming in the future. We obviously don't have a commitment or forecast which is beyond the end of this financial year. But overall, given what we see a very good future for the digital transformation work.
Right. I'm just going to try one more time. So very good future would mean, will Infosys return to double-digit growth? It will also be, just in time after you complete 3 years in the company and the 3-year target that you set out to transform Infosys.
So there on the 3-year transformation, I think we've had a really good progress. As you know, in the first year, we grew at about 9%. in the previous year, 9.8%. And even in this extremely difficult economic environment, we still have a growth guidance of between 2 and 3%. And really one of the very few companies which have that level of growth guidance from a technology perspective within our space. So we feel very comfortable that we have a good growth momentum in that sense. Now, post that, when we get into the next financial year, we'll wait and see how the end of the year looks. But every indication gives us a sense that we'll be back to where we were in the pre-crisis area.
Or even better than the pre-crisis period?
Well, it could be better, but we certainly have a sense that we are in that sort of the same momentum we had as we got into this is where we'll come out, if not stronger.
Right. And Salil, just want to understand on the profitability front, margin front, second quarter, of course, was a blockbuster, 25%. But, even then you said that there were a couple of exceptions. So with the wage hikes kicking in, with travel costs going up, it may not be 25% again, but you have given a margin guidance of 23 to 24%. Now, with digital revenues picking up, you said it will cross 50% of revenue of your business soon. Are you seeing an increase in pricing power? And this transformation to digital, this acceleration to cloud, will this mean that, Infosys is kind of going to enter a higher margin trajectory now with revenue per employee also going up, productivity also going up? How do you see this impacting your margins going forward, your margin profile going forward?
So there, Chandra, on the margin, as we shared, I think we had an extremely successful quarter in Q2. We'd also given a guidance, as you shared, 23 to 24 for the full year. Our sense is there are some situations in Q2 and even at the start of the year where we were extremely careful with our cost discipline. But some of that will come back. For example, the travel, as you mentioned, we've also announced salary increases for all of our employees at different times. We want to make sure that we do all the right things for the business, and hence the guidance we've given in margin is factoring all of those things in. Going forward beyond this financial year, again, we've not given a margin guidance, but we believe we'll remain the way we are in that sense, really a high margin business.
Right. And Salil, one thing that has really worked for you and other companies is a favorable offshore on-site mix, largely because of the travel restrictions. A lot of work has been able to get executed offshore. Do you see this continuing even in a post-vaccine world? How are you seeing the landscape, the business landscape, the delivery landscape changing in a post-vaccine world? Is this model here to stay, the higher offshore model? And the second part of that question, what will this mean for billing rates? Because traditionally, the on-site billing rates have been higher than offshore. So will we see a pressure on billing rates coming in if more and more work continues to happen offshore?
So there again, Chandra, the way we see it is, given the travel restrictions, we had a faster move to that offshore on-site percentage mix. We think that some of that will continue, but some of that will be reduced because travel will open up. And there's always a mix of work which is not driven purely from a margin consideration. It's driven much more from what is required for the digital transformation work with clients. So we do some of the work on-site and some of the work offshore. A little bit of that will move back to on-site. We also have large digital studios in Europe, US, Australia. So those will be the places where some of that work will be done. And then as we move ahead, what that means really in terms of pricing, I think what we saw in Q2 and we shared, the pricing has been relatively stable in Q2, and we don't anticipate any big changes from what we see into the discussions we're having for the foreseeable future.
Right. And Salil, if I look at deal wins, Q2 was obviously very robust, over 3 billion worth of deal wins. And I read an analyst report which said that, there was a historic high of over $500 million deals. Is that continuing into the third quarter as well? Or are there uncertainties now because of the US elections next month? Perhaps clients are in a wait and watch mode. And we are also seeing these recurring virus outbreaks in Europe. So have these two had an impact on closures of deals, on the discussions that you're having with clients at this stage?
So there, just to put some color on it, first, the way we share those numbers, they reflect only large deals. So we don't discuss all of our deals, and these are deals above a certain threshold. Now, typically, and I've shared this in the past, these are more volatile. What I mean is each quarter is not the same in terms of predictability, but over a period of 12 months, we have a decent idea of how these deals will evolve. We have not seen any impact today as a consequence of the US election situation or the European, the cases increasing situation. I think notwithstanding that, there's always volatility in the numbers quarter on quarter, but our deal pipeline, as we shared when we shared our results, is very strong, and we remain confident that over a period of time, we will continue to participate in these large digital transformation programs with our clients.
Right. And in terms of verticals, banking and financial services, most of the growth there has come back. But are you seeing retail and manufacturing come back in a strong way as well? Because, retail, there are still uncertainties because of concerns over bankruptcies. So, are you seeing deals come back in this segment? How is quarter three looking as far as deal wins business is concerned? Because this is also a traditionally weaker quarter for companies because of the holiday season and furloughs.
So there again, I think you're absolutely right. The financial services business for us has been a good, strong business in Q2, and we see a good pipeline there. We also see very good traction in the high-tech industry, and we've seen tremendous growth and good outlook for the high-tech industry as well. On retail, what we've seen is there was more difficulty in Q1, in April and May, but now in Q2, slowly each month things are starting to improve. So we are more optimistic that retail will start to come back quite well. Manufacturing as well has been a bit more stable in Q2, and we now need to see some of that improvement start to come through going ahead.
Right, right. And Salil, one of the significant launches in the last few months was Infosys Cobalt, which will really help clients accelerate the journey to cloud. And that is one of the big opportunities now about digital transformation. How has this really helped you in gaining edge when it comes to deal wins, when it comes to new pitches with clients? How has this really given you an edge, and how do you see this happening?
So Cobalt is really a game changer, the way we've got it out in the market. So Cobalt consists of 200 industry special components and about 14,000 cloud assets that we have within Infosys, which are available, ready to use for our clients. It's got partnerships with all the major software as a service providers, the platform as a service providers, and the infra as a service providers. And we believe that this is a huge asset base within Infosys, and we are starting to see good traction from our clients as well. For example, many of the transformation programs that we are involved in involve some type of activity, whether it's on software as a service or whether it's on infra as a service, and cloud is really the primary driver for a lot of that change. So many of our clients are looking at cloud first implementations, and this Cobalt helps them to go faster because of all these ready assets, and also reduce the risk because these assets have been tried and tested within our environment. So we think it's a huge positive, and we are seeing good traction from our clients.
Right. Salil, in your conversation with clients now, what is the sense that you're getting? Is this model going to continue the way that you're delivering services now, continue in 2021, in 2022 as well, when we hopefully have a vaccine, when it's mass distributed? How is Infosys in the post-vaccine world going to look like? Is the current delivery model going to be there where a majority of work happens remotely, offshore, or will clients again come back and ask for more in-person, on-site presence? Because there is also the security angle at play. So how are you really preparing for the post-vaccine world, so to speak? IT companies have adapted very swiftly post-COVID during the lockdown, but what should you be preparing for as far as the post-vaccine world is concerned?
So there, I think first, the way clients have been, they've been tremendous in supporting Infosys. They've been tremendous in understanding that our focus has been the safety of our employees and really work in this extremely flexible work from home model. In terms of what we're thinking once we are able to get beyond the medical crisis, clearly we'll have much more of our employees working from our campuses in India, from our digital centers in Europe, US, Australia, and also, of course, from client locations as clients decide that that's right and appropriate for them. We see that that model will be much more flexible. It will also involve a lot more work within our digital centers that we built, for example, in the US. It will involve a way of working which gives a lot of flexibility to the clients and to our employees. But we will see much more work moving into where the client locations are as well, and we will see a more balanced structure going ahead. We've not put a definitive target percentage, if you will, of how that will look, but we are quite clear that this is going to be much more flexible and much more aligned to how some of the digital work will get done from our digital centers.
Right. So if you look at global companies like, say, a Google and Amazon and others, they've clearly said that employees can continue to work from home till July 2021. Now, even for the latest quarter, 99% of Infosys employees have been working from home. Will this continue through to the middle of next year as well? How do you see this playing out over the next 6 months?
So there we've taken a view to be a little bit more flexible in the way we will define the timeline. Our work really relates to doing work for our clients and not only work which is internal to Infosys. So our approach has been to look at this on a month by month and a quarter by quarter view. Today we are clear in October, we are continuing in that direction, but every 4 weeks we have a review to see what we should do, keeping in mind the safety of employees and then keeping in mind what is required from a client service perspective. So those will be the guidelines. We've not yet set any long-term or medium-term sort of targets or dates, but much more looking at it as the situation is evolving.
Right. A final part of my interview, Salil, in terms of the capital allocation policy, of course, you announced an interim dividend for with the second quarter results, but a lot of questions on why Infosys did not decide to go in for a buyback. Any reasons for that? And
so there,
one perhaps going forward.
Yeah, so there, Chandra, I think our policy that we laid out last year talks about across a period of 5 years, we have the ability to do dividends and buybacks. So we have neither commented on whether we'll do it or whether we won't do it. Our policy is very clear that it's over a period of 5 years. At this stage, we were very clear that we want to make sure we return cash to our shareholders. So as you saw, we had a 50% increase in the interim dividend that we announced. So it's a huge step forward in terms of the returning cash to shareholders. And we are well within the guidelines of the policy that's been set out. And as the next few years come, based on what we feel will be most appropriate method of returning cash to shareholders, we will take those sort of actions as advised by the board.
Right. In terms of acquisitions, Salil, we saw 3 last quarter, very niche, tuck-under acquisitions with respect to startups working on Adobe, Salesforce, ServiceNow. Is this going to be the pattern going forward as well, where you will not do perhaps one big bang acquisition, but it will be a series of these tuck-under acquisitions? Should we expect something on those lines this quarter as well?
So there again on the acquisitions, our focus has been to support our digital strategy, and these 3 that you referenced were in the cloud area, Salesforce, ServiceNow, and Adobe, SaaS, all SaaS platforms. We are continuing to look at those types of acquisitions, so we have a good pipeline. The timing again for these things is not very predictable. It's a function of what you see, the cultural fit, and of course the pricing and so on. But we have a good pipeline and we think we will continue. So if you look at a 12-month period again, we think we'll have a steady stream in that sense of these type of acquisitions. We've not ruled out something larger, but we don't have any specific plan. Those are things that come as and when things become appropriate strategically, again, from a cultural point of view, price point of view. Our main focus today is really on these digital acquisitions.
Right. Right. In terms of hiring, Salil, will we see more robust hiring from now on? Our checks at colleges also indicate that a lot of software companies have started hiring, and we did see a sequential increase in the headcount number across IT companies for second quarter. So are we going to see hiring pick up in a big way in line with the business that you're seeing, the demand that you're seeing?
No, absolutely. I think as we've seen growth and we've increased the growth outlook for us, our hiring outlook is also more robust. We will hire approximately 15,000 college graduates in India over the next year, approximately 1,500 college graduates outside India, and in addition to that, we'll hire individuals at different levels. So we have a fairly robust hiring outlook today.
Right. And Salil, you said the US presidential election hasn't had an impact, at least so far, in terms of the conversation with clients are concerned, deals are concerned. But what are you bracing for? I mean, the jury is out, a lot of polls are predicting a Biden win. Will that be a positive for IT? Because he has been more open to offshoring, outsourcing. He also sort of came down heavily on the proclamation that called for a visa ban. So, what scenario are you pricing in or painting in as far as the US presidential elections are concerned?
So there, Chandra, one of the things we've done over the past few years is build out what we call our localization approach, where we recruit individuals from colleges in the US. We recruit locally US employees. We made announcements in terms of the number of those employees we recruit. And we recently made yet another announcement for the next 2 years that we'll recruit 12,000 US employees. So from our perspective, we are building a business model which is more and more resilient for the future. We don't have, and I don't have a view specifically on the election, but our approach has been to build a business which can work under most scenarios within the US system.
Right. Final couple of questions, Salil. As a veteran of the IT industry, you have seen multiple boom and bust cycles. I think three scenarios that were a game changer. One was Y2K, which led to a huge explosion in growth. Then you had the GFC, after which also IT companies saw a huge explosion of growth. And now you have COVID-19. Do you believe that out of these three scenarios, the post-COVID-19 scenario is perhaps going to be the most significant one in terms of growth, in terms of the huge potential that outsourcing firms will see? Is this perhaps the tipping point?
So here, I absolutely agree, Chandra, that the opportunity we have in front of us for Infosys, for technology services, is just incredible. What has happened around the world is more and more large enterprises are going through changes which support the digital infrastructure. And that change, if we are positioned well, where we are providing the right capabilities, providing the right skills, providing the right insights, is a massive opportunity. From our perspective, that opportunity is a fast growing opportunity. And I'm really extremely optimistic that as long as we are focused on that digital and cloud opportunity, the coming years are really very positive for the technology business.
On that note, Salil, thank you very much for joining us on ET Now, and I really hope the next time we are doing this interview in person, possibly over the amazing filter coffee that you get at the Infosys campus. But thank you very much. Stay safe and take care.
Thank you, Chandra, and yeah, looking forward to that session. Stay safe, take care.